Okay, now let's get back to results season. We have a company, Blue Star, with us. Blue Star posted good third quarter earnings. The company saw revenues rise by 20%. Order book has increased 47% compared to last year. However, the company has also seen a mild contraction in its margin this time around. Vir Advani, the Vice Chairman Managing Director at Blue Star, joins us. Mr. Advani, good morning. Thank you very much for joining us. Well, if you can tell us how this quarter also is panning out, fourth quarter, is the demand of Q3 also apparent in Q4?
Morning, Lata. Thank you for having me. Really appreciate it. So we had a good quarter, as you said, 20% revenue growth. We did have some contraction in margin, but I think EBITDA grew to about 105 crores and our profit before tax was at 80 crores. More importantly, our carry forward order book is up about 47% same period last year. So order inflow has been strong in Q3 in both the B2B and the B2C markets. In fact, in room air conditioners, in spite of a slow festival start, I think we ended the quarter very strongly in December. You asked me about Q4. I think Q4 for the B2B businesses continues to be strong. January has been good. Order inflow continues to be very aggressive and impressive. And we're looking forward to a very hot summer and are really prepping for a big Q4.
Hi, Mr. Advani. On the margin front, it was a bit of a blip in the past quarter. How does it recover on a blended basis? You have told us vertical-wise, I think, you want one of them to go to around 8.5% or gradually. But on a blended basis, what could it go to? And also, Sri City, that's been commissioned, right? How much does it contribute in the coming year? That's FY24 as well as FY25?
Great. So as far as margins are concerned, while we continue to see stress on the gross margin, you can see that we've been managing our operating expenses relatively well. So for the quarter, EBITDA came in at 5.9%, which is, and it was 6% same quarter last year. You know that Q4 tends to be a much bigger quarter, margins do expand, and we're expecting that to improve. Now, while there's been some hardening of commodity costs as we're going forward, you know that we would have already bought all our raw materials for the entire summer season. So we're clear what our costs are. Pricing, we are keeping at the same levels as Q3. We're not able to increase prices at this stage. We want to see how the summer demand picks up and then take a call on that. So I think Q4, you will see an improvement in gross margin and, of course, in operating margin. Not dramatic, but it's a good direction that we're in. You asked about Sri City. We commissioned Sri City in January, so commercial production has just started. We're still serving most of our Q4 demand from our Himachal plant. The Sri City plant will ramp up month on month, and for the full year, it will contribute about 30 to 35% of the calendar year. January to December, we'll do about 35% of our demand will be served from Sri City, but it's a monthly ramp up. So that's how we're looking at it.
Okay, Mr. Advani, for FY24, do you think that what the budget has done in terms of putting a lot of money in capex, right? And that seems to be a trend. It should greatly benefit the industrial side of things for you, the B2B. The impact should be very good. And if you can tell us, is there a volume growth expectation for FY24 that you can leave us with?
So as far as the budget is concerned, there are three important things I want to talk about. One is they have started to look at the inverted duty issues, not for our category, but at a broader level. I think that bodes very well as a signal and direction for our integration into global value chains and for our exports to grow. So I think that's one directional change that I've seen. As far as demand is concerned, you're right. The 10 crore lakh capex move is going to be very, very positive for our industry and for Blue Star. You know that, in fact, they've singled out transport logistics as a major focus for that investment. You know, most of our business is not in roads, but we do participate in airports, railways, all of that side of the transportation investment. So we're very optimistic. Already you can see order inflow has been very strong in the last year when they increased the capex budget last year. So I'm looking forward to very strong order inflow growth next year. It could be well over 20%. As far as the residential business is concerned, I know we're still trying to understand the full impact of the tax slab changes, but I think net, it is positive for middle class India. That's our main market. And I do think it's going to put more money into the hands of people, give them the confidence to come out and spend. So we're also seeing a big benefit for both our residential air conditioning business as well as our refrigeration business, which serves the quick service restaurant and hospitality industry. So I think the budget has been very positive for our industry and for Blue Star. Looking forward, we don't give forward outlook, but I think next year is going to be a very strong year for us. We're looking forward to volume growth, definitely, but really the focus will be on margin expansion and getting ourselves back to that gross margin that we used to have pre-COVID. I think it'll take us about 4 to 6 quarters, but it is doable.
All right, Mr. Advani, thank you very much for your time. Good speaking with you. Big moves. I mean, Ambuja Cements is up 7%. Let's have the stack up. ACC is up 3%.